I'm Rachel Ballatori, your host of the Mill podcast brought to you by Mill and Company. I'm the founder and CEO. Thank you so much for joining us. We have a very exciting and innovative guest with us today, Zach Taylor. Zach, thanks so much for being here.
Great to be here.
Let's get to know Zach a little bit. His pronouns are he, him, and his, and he's the co-founder of Blue Herring, a B2B to C insurance brokerage built to solve life, disability, long-term care insurance, and annuity problems for fee-only advisors and their high net worth clients. Zach is a Mainer through and through. Do you have Carhartt on right now by any chance?
No,
How Maine
but
are you?
I do have some LL Bean though. So
You know what? You're right. That's more on brand. Zach resides in Maine with his wife and his two daughters. Maine's motto, Dirigo, which means I guide or I lead in Latin, has always resonated with him. He tries his best to live into it, especially as a father of two young girls in today's world. An avid surfer, skier, and outdoor enthusiast, Zach hopes that as his girls grow older, they will be passionate about the search. So he has to stay young and healthy to keep up with them in the mountains or during breaks. Zach, thanks so much. This is so exciting. We met years ago at a New Hampshire Tech Alliance event, and Blue Herring was about a year in to business. And I remember just being so fascinated by what you were trying to build.
yeah, and it was fun, and I appreciate you coming up and talking to me after. I was like a wreck up there with that presentation. That was like a last minute invite, and I felt like I was over my skis, but I got through it, and it was nice to see a friendly face when I got off stage.
Yeah. I did not know I'm today years old when I found out that you were doing that very last minute. So the wool was successfully pulled over our eyes, Zach. So tell us a little bit about yourself. Can you share the defining moment, if there was one, that led you to starting Blue Herring?
Yeah, I mean, I think you got all the high points on the personal intro. Just love being up here in Maine in the Northeast, and I've tried to move away and found myself back. And thankfully, that led to kind of the starting point of my career. I was actually running a family-owned marine construction company out of college, and learned a ton about business there. Didn't mean to do it, just kind of fell into it, and then ended up getting recruited by a Guardian life insurance agency. I was burnt out. They caught me at the right time. It was a father-in-law, racquetball buddy, and it sounded like a good pitch. It was like work 20 hours a week and make something close to what I was working. I took the bait, but thankfully, that is where I met my partner and partner Alex Grammatic, and we also got to see the inside of the Guardian agency system, which really laid the foundation for how do we build something that's the antithesis of how insurance is sold in the life segment of the world. So that was a big point for me, where realized there's got to be a better way. We didn't know necessarily what that was. We just knew we needed to start our own thing and figure out how we could do it better.
I remember us having this conversation because the story of Mill & Co. is actually quite similar, where I worked at some very traditional advertising agencies, and they are fantastic and well built, but there's a lot of toxicity. There's a lot of weird hierarchy, and the client ends up paying a ton of money, and they're not really sure what they're getting out of it in terms of value. And I remember sharing that with you. You know, when I started this model of Mill & Co., nothing like it existed. Still to this day, there are very few companies that operate like we do at the scale that we do, using freelancers to execute work and then in-house people to run strategy and management. So, you know, it takes a lot to try to break a very traditional industry that's been run a long time. And, you know, in your LinkedIn bio, you talk about how the traditional life insurance industry made you, quote, sick to your stomach. Tell us more about why.
Yeah, this is one that we could spend the whole podcast on, so I'll try to keep it really brief. But
30 minutes.
Yeah, it comes down to the system's just within the agency model, which is roughly 40% of a very large amount of annual premiums that are paid, like 160 billion, maybe a little less, but rough number. So about 40% of that is the Guardians of the world, or the Northwestern Mutual, New York Life, Mass Mutual, all great carriers, product But the way that they distribute the product is through an agency system, and it's essentially mostly hiring young or hiring transition. And people are pitched this, kind of experience, and then mostly you get in there and realize you're just hustling mostly whole life insurance or whatever other product for that carrier. You are a statutory employee of the carrier, and it leads to pretty quick burnout. Very few people survive past the first year or two.
Mm.
And then that agency essentially just keeps collecting the commissions, and they rinse and repeat. And that's why there's a huge turnover, and people are incentivized to sell their carrier's product, even though it might not be the right carrier or the right fit. And it leads to pretty suboptimal results for the end consumer. So it's tough. It's not necessarily, it's hard to point the specific finger, but the just whole system's not working that well for the end consumer. So we see it day in and day out, and we, that's why we look to try to build something that produces a much better result for the end consumer.
Businesses that capitalize on fear tactics, because someone has attempted to pitch me on a whole life plan, and I have some friends that have the plan, and to approach someone out of fear of like, here's what could happen, and then alternatively, look how much money you could make. Oh, by the way, here's the 10 things that have to happen before you can even tap into that money. But in the meanwhile, you're going to pay us all this money, but our commission hits in the first year, or whatever the rules are. I know nothing about this.
No, you got about right.
That I ethically have a hard time with that for the same reasons that you do. And I think, unfortunately, a lot of folks, just having a conversation with a CPA the other day about, we are not taught taxes in college. Unless you are going into that kind of specialty, you're not learning about investing. You're not learning about life insurance. So then we're thrust into the world as humans, and you're trying to figure out what to do. And you're like, oh, I should have life insurance, I think. But what do I do? Now I have to go do my own research. Who do I trust? How do I know what they're telling me is truthful? There is so much unknown out there, which is why these big firms are capitalizing on that for people.
Yeah. And to add to that problem as well is that it's not fully known by the agents themselves. Like Alex and I didn't really know. We knew it didn't feel right, but we didn't know how big of a difference it can make when you have full flexibility. And also in our underwriting model, where we have full flexibility in the underwriting so that we can really force carriers to compete on behalf of the client. And it's pretty wild results. But we stumbled upon that. That was part of, we knew something was wrong and we needed to get out. And then we started trying something new and realized, oh, this could be impactful. And we've just iterated on it to the point where we realize there's just no other way to do it. It has to be done this way. And we're just trying to get the word out.
That's incredible, and I love that you were literally founded to challenge the status quo of the traditional insurance industry and put clients first. What a concept. What are some other things that you're doing to try to drive meaningful change and educate people in this industry?
So Alex and I joke, what we're doing isn't really rocket science. I wish it was. So maybe we can hold it a bit longer on our own. But in reality, we want more of us. Like it's just what needs to happen. We hope there's copycats. We hope it starts accelerating towards a larger change in the life insurance world, where like what's been seen in the wealth management world, the days of stock pickers, it doesn't hold up anymore. That's table stakes, like being able to invest somebody's money well. Like you have to be a comprehensive planner. You have to be rolling up your sleeves and looking at the big picture and doing what's in a client's best interest. And we hope the industry gets there, and we hope we are part of the vanguard that pushes it that way. But what we do is pretty simple. We just try to be normal, approachable people that care and are trying to solve the problem. We really focus on speaking in plain language and being transparent and bringing transparency to what's going on. we really have pushed towards delivering a client best interest model, like a fiduciary level analysis when we're evaluating existing coverage or looking to implement a new strategy. And then, the other kind of secret sauce part is we do 20x the work. We do our homework, we do the due diligence, we figure it out. And it took a long time to get from what we thought was a really awesome idea, and we thought it was just going to take off. And but we learned the hard way. It's still a trust game. It doesn't matter how cool or different you sound. You still have to build trust with these advisors. It takes time, and we kind of just took a bet. Like, how long will it take to play the karma game and just do what's right and deliver the results and stay true to our core values? And eventually, 3 years later in the model, it's become very successful, thankfully.
Yeah, that's really exciting because, again, we met at the very beginning and I loved the idea of the concept, and it was still kind of building and growing. And you and Alex were like, how do we make sure we're making the right decisions and what do we do here? And I'm curious, what are some common mistakes or missteps that you see happen to people often when they're structuring their insurance?
Yeah, I mean, the first problem to solve is, like, who are you working with? And they're, it's pretty easy for agents and producers out there to hide under the guise of being an independent broker. You got to scroll down to the bottom of the website and look at the fine print to realize, oh, that's actually a Mass Mutual agency or a Northwestern. Northwestern Mutual is better at it. I think from a compliance standpoint, they do a better job of making sure people know that it's Northwestern Mutual. But Guardian, New York Life, a lot of these shops, you don't really know until you see the first pitch on what the product's going to be, and then you kind of realize, okay, or unless you even know, like, should I be talking to somebody else? That's the other problem, is people don't. It's so much of a trust game, and a lot of these advisors lead with complexity. It's hard to know, am I getting a fair shake here? So there's an upfront problem of the general consumer not knowing who they're really dealing with and not knowing to know better either. So that's problem number one. But it's the simple stuff. Like, in general rule of thumb, term insurance in the life world solves most problems. Like, if you have a permanent policy and you're in your 20, 30 somethings, especially a whole life contract, it probably was sold to you, and to the benefit of the person that sold it, not to your benefit. You likely should have had a term policy to cover, what could have been a large loss of income had something happened to you. Now, it's not like a general rule of thumb, like every situation's nuanced, but like, it's just what we see. We see whole life sold way more than it should be. There's a place for it. And typically, if you have a permanent life insurance policy, there should be a need for a death benefit at any point in the future. And it's pretty much just for liquidity purposes. So part of a business situation, you're a business owner. If you were to die or a partner were to die and it would essentially crush the value of the business, you'd have to fire sale, whatever the situation is, and you need to shore up that business or buy out your partner's spouse after the passing of a partner. That's a great reason to have a permanent policy, designed within, structured correctly within the company. Or if you have a large estate and, there's probably going to be an estate tax bill, another good reason. But it's just a much smaller percentage of the general consumer out there needs a permanent policy. So that's another thing to be looking for. And then if you haven't looked at your insurance in 5-10 years, that's another good reason to revisit and see, hey, what's going on here? Has anything changed on my end? Has anything changed in the industry? Is this still a good carrier? There's just a lot of reasons to not go with the normal set it and forget it mentality in my industry.
Yeah. So if I'm a high net worth human being, How do I know if I've been sold an overpriced or unnecessary insurance product if I am not educated on the industry? What are some things that people should look out for or consider before making a decision?
I mean, my um, a good place to start is to have a trusted financial advisor at, a fiduciary advisor that's at an RIA that is really just looking out for your best interests, and to have somebody that you can lean into of that's hopefully vetted somebody already. It's a good place to start. Don't allow an insurance policy to be put in force led by an insurance agent, especially if that agent works for Northwestern Mutual, Guardian, Mass Mutual, and New York Life, or any other carrier for that matter. Like, you really need to know you're working with an independent broker. So if you didn't work with an independent broker, ideally one that was vetted by a trusted advisor, then and they led the conversation, there's a really good chance that you should reevaluate what was done, because one, there it might not have had full due diligence done, so you could be overpaying, or it could be structured in such a way that it might not work the way that you want it to, and or there's an opportunity, that you might be able to improve the situation, because a lot of times these policies are sold and nobody's actively managing it after it's put in force. So um, it's one of those things where if when it was sold, if you didn't have like a great feeling, you felt like, I just kind of put this in force and it felt like it was a little salesy, or you can't really remember exactly why you put it in, or what it does or how it works, those are all kind of good indicators of you might want to revisit this.
Yeah. And let's say someone has an insurance policy or policies in place, they've been in place for years, they haven't looked at them. Today, if they're watching this podcast, what are things that they should go look for right now?
Um, Good things to look for, and this gets into kind of like the nerdy part of my world, but especially if you have a permanent policy, there's like two general worlds. There's the term insurance, which is essentially it lasts for X number of years and then it essentially goes away. And then there's the permanent side of the world, and there's whole life, variable universal life, index universal life. There's a bunch of different types of permanent contracts. So if you have a permanent contract, you really need to have an in-force illustration run if you haven't had one run. And on top of that, you really need to have it run at a much lower performance rate than what the carrier will share with you. If you ask the carrier or your agent, the person that helped you, they're going to send you the best performance that they can show you, which is the current dividend rate or current interest rate performance, which it's unlikely to happen that way. So we always like to stress test this stuff and see, okay, that's great if it does 7 or 8%, but what happens if it only does 4% or 5%? And you look out into the future when you're 70, 80, if all of a sudden that thing goes to zero, then that means you've got a big problem. So the carrier is going to start sending you a bill for the cost of insurance when you're 80. And you don't want to see that bill. It could be tens, if not hundreds of thousands of dollars a year when you thought you paid that policy up and you didn't have to put any other premiums in. So it's a little technical, but if you've got a permanent policy, you should run it in for. See, like, how is this thing doing? Is it doing what the person said it was going to do? And what happens if it doesn't do quite as well as the carrier thinks it's going to do?
Right. And I think it's really smart that Blue Herring is going through trusted financial advisors working at independent RIAs, because most RIA relationship managers will have something called a center of influence. And those centers of influence could be accountants, attorneys, brokers, right? Other platforms and people that they trust. And users, high net worth individuals, or just people in general, business owners, small business owners, need to rely on that to be in the center of that circle, and they've got all their people and they're the nucleus and everything's just kind of feeding into them. They feel very safe. A lot of people, at least in my network, look at life insurance as just a line item expense that they have to make. How do you try to encourage people to view this as an asset, as an overall part of your wealth strategy?
So that's tough. One, because nobody likes to think about their mortality or morbidity. So like dying or not being able to, like having a severe disability, right? It's tough conversations. It's tough to come around to that. Strangely enough, we find people have an easier time with life insurance. Um, so they're more willing to get the life insurance because it's almost like they're pretty sure they're not going to die early. But there's something about disability insurance which is really hard for people. It's one, more expensive, um, but that's actuarially because it's much more likely to happen. And people just have a hard time imagining. They say, well, I'm not going to get hit by a bus. Well, that's a very, very, very low probability chance as opposed to you being diagnosed with cancer or some sort of muscular skeletal, something that makes it so you can't do the job that you're doing at the capacity you're doing it at. So um, it's hard, but you and your spouse, like, or you and your partner, if you're in business, you are the most valuable asset to your personal balance sheet and business balance sheet a lot of times, and you're the top cash flow item. So like if you're not around or you can't do your job, that big awesome wealth management plan that you came up with is going to go right out the window. So when you're younger, and you're talking about kind of short-term catastrophic stuff, that $5 million term policy, that $10,000 to $20,000 a month disability policy, that's what shores up the balance sheet for the catastrophic things that could potentially happen. As you get older and you do a better job planning and you're working with your full team, ideally that risk gets lower and lower and lower. So and you're making more money, and inflation happens, so that initial premium doesn't feel as big of a hit over time. But when you're talking about permanent designs, when you're talking about estate planning, that's a real item on your balance sheet. If you get a $10 million permanent policy designed to help pay estate taxes and it's designed and functions correctly, that's not a fake $10 million. If it's designed correctly, it's managed correctly, it's going to pay out when you die, and that's $10 million tax free that shows up on your balance sheet. Ideally, so you don't have to sell part of a privately held business interest to pay your estate tax or whatever the situation is. So, we just try to talk people through it. It's always a little tricky, but that's why I try to take a consultative approach, and we always want to do it with the full team. We want the advisor, we want the estate planner, we want the CPA, we want everybody to be on the same page and be really transparent and just try to show them what's possible and let them make an educated decision about how to best solve it.
I think having that kind of collaborative model is the best way to approach that, because then you all win. Businesses win that are working with these clients. The clients win because they need to protect themselves, their business, their life, their family, their generations beneath them. So I think I applaud you for working to build a trustworthy business in an industry that is probably anything but. I won't speak for everyone, but I know some that are a little shady. And I'm curious with things like the introduction of artificial intelligence, with the evolution of how RIAs are functioning. How do you see the insurance industry evolving over the next 5 to 10 years?
Yeah, AI is fun. Like I feel like there's a lot of opportunity to increase efficiencies and open up underwriting possibilities. And I don't know if the carriers will reprice their products, because I think they've got other counterforces that might push against, or they'll just kind of stuff the profit from the efficiencies built with AI, but who knows? But it should have changes. It could lead to a less painful process for clients. So that sort of thing's exciting. there are some, there's on the life side, we have an aging problem as well, where a lot of the agents and brokers out there, it's probably top heavy, and they're getting to the kind of end of their careers, and it doesn't feel like there's as many younger individuals that are looking to make a lifelong career. So that that's a problem and an opportunity. We certainly see it that way. I think the other thing is there's a lot of private equity involvement in the life insurance nowadays, which is slightly worrisome. And we've seen some cracks with some recent developments with a few carriers, and there's going to need to be changes to continue to have it be the long-standing, sustainable, and trust, at least from a carrier standpoint, relatively trustworthy industry. You expect carriers to be around for a long time. So those are all things that are kind of interesting, and it will be fun to see. Well, I don't know. Yeah, fun, interesting to see how it plays out over the course of our journey with Blue Herring.
Yeah, I'm excited to be along for the ride and witness it. And so, just to bring us home, Zach, what's next for Blue Herring? Are there new services, innovations, things you're excited about, things you're allowed to share with us?
Yeah, so we're mostly focused on continuing to build the team. So that will be the hardest problem, as other business owners out there know. Like,
Mhm.
the people are they're the lifeblood of the company. There is no company without the people. It's the most fulfilling and hardest problem of owning and growing a business. So I think we're have a unique problem as well, where we're a little bit kind of outsiders in the industry. So it's harder to find that culture
Mhm.
and philosophical alignment, and so that will be a struggle for us. But um, so that's kind of the big thing for us. We intend, our big, hairy, audacious goal is to have a front end Blue Herring team in the top 10 cities in the country over the next 10 years. There's more than enough room for us. There seems to be the appetite for it. And we realize that, it doesn't matter. We're doing a lot of investments on the tech side to just continue to build the efficiencies, and have this thing go to scale. But we realize that it has to be a human touch. Like, it's too nuanced. People want to talk to a real human being. Advisors want a real person at the table to solve the problem. The technology just allows us to do that 20x the homework that we talked about earlier, and do it effectively, and have that repetition and repeatability for what we're building here. So that's kind of the fun thing. It's going to be, I guess jury's out on whether we pull it off, but it feels fun. I'm excited. I wake up every morning excited to keep tackling problems, and it's just part of owning and building the business.
It sure is. And if anyone that's watching this podcast might be a good fit for Blue Herring, what are some quick, qualifications and characteristics of a person that you're looking for?
Yeah, so as a B2B to C, our focus is finding fantastic partners. We love working with, like, our center of the bullseye, most favorite partner is that advisor at an RIA. They're not just fiduciary for marketing. They believe it. That's their philosophy. It's their core value. They are out to do what's in their client's best interest. They're quarterbacks. They want to build a great team around their clients. They're very growth oriented. So not just they want to see change, positive change in their industry, in themselves, in their clients, and they're collaborators and comprehensive planners. Like that, that's who I'm looking for. They just fun people that are looking to solve problems for their clients, and are that's the center of the bullseye for us. So yeah.
Yeah. So if that's you, you'll be able to connect with Zach because he'll be tagged on this podcast, when we share it out to social media and to our network here. So, Zach, thank you so much. It's been really exciting to chat with you and catch up and hear about how things have kind of evolved over the last few years for you. I'm very excited at what the future holds and to watch it all unfold. I really appreciate you making the time to be here.
Yeah, no, this is great. I'm glad you reached out, and thanks for letting me have Ralph on too.
Yeah, maybe we'll get is it Frank? Frank's the other
Yeah,
one?
Frank boy. He must be napping. He had a big day today.
Yeah, I get it. It's a tough day. Next time we'll get all of them on. I'll get my three dogs in here and
Yeah,
we'll just have like a
full fur
giant
baby
like
episode. Yeah.
barking, meowing thing. Yeah, really good. All right, Zach, thank you so much for
Yeah.
everyone who tuned into this episode. Thank you very much again. We'll see you next time on The Mill.
Thanks, Rachel.